Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. I wasn't going to do a video today, but I saw something very interesting in the charts which I thought would add value to all my subscribers. So I hope it's just a very short video. But before I begin, just the usual disclaimer. Please remember everything in my videos is for educational purposes only. Nothing in the video should be taken to constitute a buy or a sell or any financial advice. As always, I would urge you to do your wider research before making any important decisions for investment. So with that out of the way, let's have a quick look at this overall chart, which I found very interesting. So basically what it is if you go into the weekly chart here, so if you take it from the previous high, the all-time high at 20,000 in December 2017, so basically the development of the charts was such that after this topping off at the end of the 2017 bull market, we had this fractal developing whereby we came up on this bump and run pattern here, got rejected, came back up, found support, and then we went on this massive bull run recently. If you look at the parallels with what's happening currently, so we had this bump and run pattern here, got rejected at the trend line here, just like over here, but this was a COVID situation, this was something obviously different. Then when we went above it, just like here, we came back and we found support at this level here. So instead of having the COVID fall here, what we've done is we've had this fall instead over here. But the similarities are actually quite interesting. And the reason is that when we came back from up here to the end of this COVID fall that we had, very similar to this current development here. And the reason why this is interesting is because, as I'll show you a little bit later, I think the way the patterns are developing, there is a good probability that we may have, just like here, a V-shaped rally. And I'll go into that in a little bit more detail when I have a look at this part of the chart pattern development. Something also very interesting, actually, if I move the chart over here, if we do the fibs, I showed you this a few months ago when we were over here. And basically, if you take the fibs from the start of the rally back down here in August, September, October, and you take it to the $69,000 mark here, which is the all-time high that we've just made recently. If we zoom in on the current chart pattern here, we know from studying the Bitcoin chart that Bitcoin has a very strong affinity towards the 61.8. And look what's happened here. When we hit the all-time high at 69,000, this fall that's cascaded down, look where it's ended up, right on the 61.8. So this doesn't mean it's bottomed here, but it could well be a bottom that we formed here. And then when we just come up here, then we may come back and create a second bottom here. We don't know yet how it's going to form, but I'll have a look at the micro analysis of it on the shorter time frame shortly. As we saw when we came down from the $64,000 mark, just very similar to what's happened recently, we came back and hit the golden pocket level of 61.8 and the 65% and bounced off it, but then we came all the way down, retested it, went back up again and retested it for the third or fourth time down here, creating this beautiful base as a springboard for this big move that we got here. Similarly, this is what seems to be happening over here, but I think instead of a large range-bound base here, I think from what I can see on the shorter term time frame, it may well be that we actually have a V-shaped rally very quickly. I think we're going to, if we do come back here, we're going to get a very big move to the upside, just like the COVID situation back in March 2020. So this fall went all the way down to 32,900, but certainly we are close to the very bottom of this fall before hopefully we can start moving to the upside. I really don't believe that we're going to fall much lower than the 28,000-30,000, which I think is going to be the bottom in this fall that we're having now. The reason why I'm thinking that we may be coming back down one more time is because if you look at the volume, usually we have a flush out, just like here, we had a big flush out before we went to the upside. This does not suggest that we've had a flush out, a capitulation to remove all the sellers in the market. So until we get that, I don't think we'll have bottomed out yet here. So while we're having a little bit of a recovery at the $37,000, $38,000 mark, I do suspect that we're going to have one big flash crash down here to these levels with a capitulation candle just like that, with the high amounts of volume over here. So before I go into the micro analysis, just a quick word about the sort of 2-month cycles which I've alluded to a few times. And that is that it was about 2 months from here to there. Then there was another 2 months from here to there. Another 2 months from here to the top there. And currently, we seem to be having another 2 months from here down to where we are currently now. So this is about 3 months here now, 12 bars. So what I'm trying to get to is here. What I'm trying to get to is that after 2.5, 3 months of this fall, we are due a big rally to the upside. And we need to be aware of this because we can all get into a bearish pattern of thinking. And before we know it, the market's taken off and left us behind in this region down here. I'm going to start off on the 4-hour chart, take it from the 69,000 top over here. And if we draw a trend line all the way down, this gives us a very good visual of where we need to basically jump on when the market breaks so that we know that we've had a reversal down here. Like I say many times, that the diagonal trend lines are not as important as the horizontal supports like these. So as the market's been coming down, I've mentioned many times that you shouldn't be catching a falling knife simply because at any point you really don't know whether we're going to have a relief rally followed by this, a relief rally followed by this, a relief rally followed by this. And it may well be we're having another relief rally here. And who knows, when we come up to this trend line, we're going to have another big fall towards the $30,000, $28,000 mark down here. So your first port of call, to be pretty sure, is that when we break this diagonal trend line, maybe let's say over here, most people, when they see a big candle here, would absolutely just jump on board here. That, I think, is going to be very, very premature for most people. However, so the first part is going to be to break this trend line anywhere around here. Once you've done that, you're going to have to navigate above this very strong trend line here between 40, this because of this candle here, and $43,000 mark. So the first port of call is going to be the 40,000. So once we get above this diagonal trend line, we're going to find resistance here, here, and obviously much further up there. So I am of the opinion that we're going to have this relief rally, which we're having now, maybe up to about 38, 39,000, $40,000 mark even, come back, either double top above the previous high, or even make a lower high from here to around 28.30 before we come and break this trend line and then come to this line here. So these are all levels which are very tradable. For instance, at the 40,000 that we're going to come here, that would be a great opportunity to short, because with a high degree of probability we're going to be coming down. Of course, it may not do that and it flips over above the 40 towards this level here. And this is where traders, what they would normally do is that once we get confirmation that we've gone above the 40, we just jump back on board to catch the ride from the 40 to the 43, 44, $45,000 mark. Trading is all about emotional intelligence and not to get emotionally sucked in terms of negative responses if the things don't go right for you. And always remember, trading is all about probabilities and possibilities and never ever about certainties and guarantees, because nobody can do that. And like I've said many times, I don't have a crystal ball, but certainly when you look at the chart development, you can see quite clearly here that with a high degree of probability, we are going to get resistance here to come back down. And then we'll probably make another attempt later on. Just a quick reference to my Twitter page where I go into candlestick patterns and what they actually signify in terms of their importance for future price action of Bitcoin. If you've been following my Twitter, you'll know that I've been mentioning some of these candlestick patterns here and over here and over here. And if you're interested in that side of the analysis, then please do remember to click on my Twitter page, which is in the description box below. So basically what I've been saying is that when the price was coming down here, I said, please don't catch a falling knife, because you really don't know where it's going to. And it could have gone from here all the way down to about 28,000. We don't know. However, I did say to everybody that the reversal signs will be given to us by the development of the patterns as well as the candlesticks that develop around here. And this is exactly what we've got so far, at least in the short term anyway. The first thing I want you to notice is that, look, how many candles have lots of long wicks at the bottom? Virtually every one of them has a long wick, which tells you a story, although we've got some at the top as well. And hence the confusion. It's the battle going on between the bulls and the bears here. And the rising price here tells you that the bulls are winning this battle, and the bulls are winning the battle slightly, as you can see from this rising trend line here. So the first sign that I saw was basically, as I mentioned in the last video, this outside bar candle, whereby this candle engulfed this candle here, so that this momentum basically was lost, because at this point the bulls came in and bought the price up. And this is what you call a hammer candle, and it's bullish simply because of this massive buying pressure pushing all the price action to much higher levels than the bottom over here. And after this we got another spinning top candle here, which was basically a little bit of an indecision, but still it's a green candle after a bullish hammer candle. And then the confusion took place after this candle. So while the price did get pushed up from this candle to all the way up to here at around about 38,900, this candle created a huge amount of confusion, because this is what we call a gravestone doji candle, as I mentioned in the last video. So just like over here, well, when the price got pushed up, at this point the price got pushed all the way down by the bears, and the bears took control up to this level here. And as you can see, at these levels there was a huge tussle going on between the bears and the bulls. And this battle isn't over yet, because what this candle signifies, we need to be aware of this. The top of this wick at 38,900 and the bottom of this wick at around 36,250. And as you can see, we've had no closes above or below. And this is a bearish candle. And what this signifies to me is that I'm expecting to see the price move all the way up to this level here. And because this is a bearish candle with a high degree of probability, I would be expecting it to come back and retest the bottom of this wick here. And at this point, we'll see whether the bears or the bulls who comes out on top. But certainly from 38,900 all the way down to 36,200, this is a new level of swing trading. In my trading portfolio, I will be taking a short from there down to there. Please remember, this isn't advised for you to do anything. This is my perspective of the market and just telling you exactly what I am doing. I could be completely wrong, and we could move from here all the way up there, and that would negate this candle. And that's fine by me. Then we have a different decision to make over here. So while we're in this range from the top to the bottom, this is the range that we've got so far, from 38,900 all the way down to the $36,200 mark. And we may actually be in this range for a while before it's going to break this line or this line here. If we do the Fibonacci here, it's very interesting that if you take the Fibonacci from this point here to the bottom that we've just had at 32,900, it's interesting that the 61.8 comes to around 39.5 and the golden pocket level to 39,700. So this is the range where we're most likely to be rejected. So it may well be we come above this range here, wick up there, and then come back down. So that's entirely possible, of course. But if we measure the Fibonacci retracement from here to this level, we can see quite clearly that the 61.8 has already been breached in this level here at the 37,900 to 38,200 level. So these are the two levels really we can say that we are going to be rejected from, most likely. And we've just come up to this level yesterday, and it looks like we're being rejected, but it could well be we go on a next leg up towards the $39,000 mark before we come back down. And I think this is where we could expect a capitulation all the way down, a very quick flash crash. I'm not saying that's going to happen. It is entirely possible to have a capitulation like I showed you on the volume bar before we have a very quick recovery and have a V-shaped rally, which basically leaves everybody behind in these levels. So all I would say is that what I'm doing is I went underweight at these levels, which I've been mentioning many times in my previous videos, that if we break the $40,000 mark, I would go underweight. And I did here at this point. And basically, I've been dollar cost averaging in these levels, especially when I saw this candle here. This was a bullish candle telling me that the bulls are now taking control. And this was a very good area to be starting to dollar cost average in. Okay, so I hope that helps. I hope that adds value to all your information that you're getting from everywhere else. And if you found value in this video, then please do remember to like and subscribe and to turn on the notification bell if you haven't already subscribed. And if you want to leave any comments, questions or suggestions, then please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.